This is my boring Robinhood portfolio. I call it boring because when I opened up this portfolio, everyone was on their hype machine talking about Palantir, talking about Teladoc, talking about all these high-flying stocks, talking about different SPAC companies, all of this stuff. A lot of people were just jumping on the bandwagon. Some people were doing option plays, and everybody was just going crazy with investing in the most random and the most unknown things that nobody really understood, but everybody said they understood, and they were just investing in whatever. Well, I went the direct opposite of all of that and decided to go extremely boring. When I first opened up this portfolio, the major holding in this portfolio was Microsoft, a company that is old. Yes, it makes a lot of money and it does a lot of good stuff, but it's extremely boring. Like, Microsoft just does B2B services. It services larger corporations. Nobody wants to own that. There's not a great story there for most people, and it's not about to explode 100% in a single year. That's not the story of Microsoft, but I bought into it. I held on to it. That's what I've had in there. I have Ally, which is the other holding in this portfolio. It's a bank. It's an online bank. I use them, so I bought into it. Now, was that I got lucky with Ally and the money that I made on Ally? Yes, I definitely got lucky. I'm not even going to play you guys with that one. But at the same time, again, it's boring. It's just a bank. Like, ain't nothing special about this bank except the fact that it does online banking and all that stuff. But it's still just a bank. It's just a bank. And then after that, we go into the more exciting parts of the portfolio, which was Alibaba, which, that was me literally just copying Charlie Munger. He said he was buying, so I was like, you know what? Charlie Munger is pretty wise. I'm gonna follow him into that trade. Now, was that a mistake? I will say to a degree, yes, because I can't really say that I understand everything about Alibaba, but it seemed like a good idea, and I still think that it's a good investment moving forward. However, if there's any other opportunity, that's the first one that I'm gonna be looking at because, bruh, your boy has lost so much money in Alibaba. Now, it only says 14%. By the way, this is all-time returns on this. And it only says 14% down, but really that is more like over 50% down in Alibaba. I sold out of it, remember, at some point last year. This is why you have this whole choppy nonsense going on in here. I sold out of Alibaba in order to put some money and do a short-term trade and get some tax benefit and all this other stuff, and it worked out pretty well for me. But the largest holding in this portfolio is SCHD. SCHD is literally my second largest holding, and this was the one that I just kept on dollar cost averaging into. I just kept on buying into it, and it is a boring ETF. All it holds is dividend stocks. It's literally one of the most boring ones. It's dividend growth stocks. The whole idea is it tracks a market cap weighted index of 100 dividend paying US equities. And when you look at the breakdown of it, look at the companies it holds. Financial services companies, again, banks, industrial companies, aka Exxon and those kind of companies. And then it has it has your technology in here and it has all this other stuff in here. But the point is the weighting goes heavily into financials and industrials. In other words, boring, like the boring companies. But I did that for a reason. I did that because I was like, you know what? First of all, I ain't trying to buy those companies on their own because I find them extremely boring. But I decided to do that because I just felt like that was the best way for me to use my money and the best way for me to invest at that point in time. And so this portfolio, like I like to call it, is extremely boring. There's nothing special about this portfolio. The last stock in here that I bought in the portfolio is the most exciting one of them all, and that is SentinelOne. SentinelOne is a cybersecurity company that uses AI to defend businesses. Can I tell you that I know everything about it? Nope. I've been reading a research from a guy that I met online on Twitter, and he has an excellent breakdown of SentinelOne and their business model and how they've been growing and how they're able to grow so fast. I'm going to be so interested to see their report next year. But generally, this is the most interesting part of it. And what have I been doing when it comes to this holding that I have? I've just been buying. I've just been dollar cost averaging as the stock has gotten completely wrecked over the last, let's just do the last year. Over the last year, this stock has just went all the way up to $74. That was crazy. I was like, no, this company is not worth $74. I did not start buying until this thing dropped all the way to $40. And since then, I've just been dollar cost averaging. As you can see, I bought it at $44 and I've just been dollar cost averaging. It has gone from $44. It went all the way back up to about $53. Then it's crashed right back down to $38. It booked up again and it's gone back down again. But the point is, I'm just dollar cost averaging. If you look throughout the month of February, the only company that I've been buying is SentinelOne. I've just been putting $50, $50, $50, $50, because I truly believe that in the world that we're heading into, cybersecurity is going to be a massive deal. And I believe that SentinelOne, it may not play to the larger players, because the larger players are either going to have Microsoft, which most people don't even know how big Microsoft is when it comes to cybersecurity, or CrowdStrike, which is the other large enterprise solution. But SentinelOne has created a solution for smaller businesses, for people who don't have large enterprises, and SentinelOne can afford to service those businesses, which is why I've just been dollar cost averaging, whether the stock is at $45 or the stock is at $37. I'm just buying. I'm just consistently buying into it. Now, if it shoots up to like over $50, your boy's gonna be like, all right, we're gonna take a break. Like we ain't gonna be buying into it. But for the time being, I'm just continuing buying. $50 every 2 weeks, $50 every 2 weeks, $50 every 2 weeks, $50, and that's all I've been doing in the portfolio. There is nothing fancy about the way that I go about in this portfolio. I pick stocks, I select a company, and I just dollar cost average it. I select companies that I believe have a long runway ahead of them. Because for me, what I'm looking at is not just that I want to hold this stock for the next 1 year or 2 years. I'm looking at how can this company continue to grow for the next 5, for the next 10, for the next 20 years is what I am looking at, because I'm not looking for something short term. I'm looking for something over the long term. And that's why I'm looking at businesses that have a long growth potential ahead of them. But if we just go over the whole holdings of the portfolio, just to look at the dividends in the portfolio, last month I made dividends of $3.10 last month, which is the highest that I've ever made when it comes to the month of February. As you can see, everything is trending in a positive direction. If we look on here, we can see that if I put a trend line on this, it will be moving in a positive direction. So far, I am estimated to make about $47.47 if I didn't invest any more money into this portfolio. But as you guys know, I'm going to continue investing in this portfolio. Now, I may not be into dividend stocks. I might want to do that because I'm looking at investing a little bit more into Ally. I'm really liking the bank. I might go and invest a little bit more into it. But generally, this is the portfolio as a whole. This is everything that happened last year. We made $47.74, which was wonderful. And this year, we're probably going to break that as well. Every single year has been going higher and higher, and I am excited for it. I'm excited to see where this portfolio ends up. But anyway, that's all I got for y'all in this video. If you are looking for something more special than this, or looking for the secret sauce of how to invest, really, I have one strategy and one strategy only. Find good new businesses that have a long-term runway ahead of them and just dollar cost average into them. Because guess what? Your boy ain't got $20,000 from YouTube money to be investing any which way. Nah, your boy only got like $50 that he can be putting into this portfolio. In other words, I need a company that is depressed. I need a company that has a huge long runway ahead of it so I can continually buy into it over the long term. But anyway, that's all I got for y'all. I hope y'all learned one, maybe two things out of this entire thing. And if you did, hit that like button. If you enjoyed it, hit that subscribe button. But I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And y'all boys out of here. Peace. Whoosh.